Hallo und herzlich willkommen bei den Wirtschaftsrationalisten. Heute geht es um Lemonade, die Versicherung vielleicht der Zukunft. Vorab möchte ich aber aus Transparenzgründen sagen, dass ich bei Lemonade bereits schon beteiligt bin. Ich habe 81 Aktien zu einem Durchschnittskurs von $50 bereits gekauft. Das ist ein aktueller Wert mit dem heutigen Tage vom 24.11. von 4.700 Euro oder 5.500 Dollar und bin momentan damit rund 35% im Plus. Also beginnen wir mit der Aktienvorstellung. Eine Analyse wird es in diesem Video noch nicht. Da werden auch noch weitere Videos zu Lemonade kommen. Aber erstmal möchte ich dir das Unternehmen vorstellen, damit du ein bisschen ein Gefühl bekommst, was das Unternehmen macht. Wir werden uns auch Videos oder Interviews von den CEO und dem Mitgründer angucken, wo sie das Unternehmen, wie ich finde, sehr, sehr gut erklären und darstellen. Aber kommen wir erstmal zu ein paar Fakten. Gegründet wurde das Unternehmen im April 2015 vom CEO Daniel Schreiber. Er ist so ein bisschen der Verkäufer und das Gesicht des Unternehmens. Und dann Shay Winninger, das ist so ein bisschen der Kopf des Unternehmens, also der Kreative und der auch die Entwicklerarbeiten größtenteils leitet und übernimmt. Der Hauptsitz ist in New York in den USA mit einer Zweigstelle bereits in Amsterdam, also in Europa, und einem sehr großen Büro in Tel Aviv in Israel. In Tel Aviv wird die kreative und Entwicklerarbeit momentan getan. Lemonade beschäftigt rund 330 Mitarbeiter, das steigt aber von Monat zu Monat relativ stark. Das Unternehmen ist noch nicht sehr lange an der Börse. Es ist erst im Juli 2020 das IPO von Lemonade gestartet und tradet seitdem zwischen 45 und 85 Dollar. Momentan sind sie bei rund 69 Dollar. Sie haben dabei bereits schon eine Marktbewertung von aktuell 3,9 Milliarden US-Dollar. Also kein richtiger Small Cap mehr, aber trotzdem ein sehr junges Unternehmen an der Börse, dadurch, dass der IPO erst im Juli 2020 war. Und jetzt stellt sich das Unternehmen dir erstmal selbst vor. Das haben sie, wie ich finde, sehr gut gemacht. Das ist auch mit deutschem Untertitel. Wenn du ein bisschen Probleme hast, das auf Englisch zu verstehen, das ist schon sehr, sehr gut im Untertitel übersetzt. Und am Ende, wenn das sozusagen durch ist, werde ich nochmal so ein kleines Fazit geben. Also dir jetzt erstmal viel Spaß.
Daniel and I have both been tech entrepreneurs for 20 years, and it just so happened we were looking for the next big thing. So we started looking at different industries, but when we came to insurance, we stopped.
We had found a destination. The more we thought about it, the more we realized that insurance may be the largest disruptible industry on the planet. Even though neither of us had come from the world of insurance, we found three things in insurance that just about never come together, that elusive trifecta. The first one was just how vast the insurance sector is. In America, you're talking about something like 11% of GDP, and it's about $5 trillion worldwide. Some of the largest insurance companies in the world do over $100 billion a year, but none of them has above 4% market share. The idea that you can be a Fortune 100 company and have only 4% market share, that just blew our mind. The second thing that we found was that it's largely unchanged. It's really dominated today by the same companies that dominated 100 years ago, and sometimes 200 years ago, and sometimes 300 years ago. In the United States, 12 of the Fortune 100 companies are insurance companies, and their average age is about 125. 125 years ago, there were no airplanes, there was no air conditioning, there were no antibiotics. So the world has been transformed, but insurance really hasn't. That speaks to a profound opportunity for innovation. And the third element is that it's a deeply unloved sector. In the Urban Dictionary, the crowdsourced definition for the word insurance is a business that involves selling people promises to pay later that are never fulfilled.
We didn't know much about insurance, but we did know that it was unloved and unspoiled by innovation. For us, that signaled the ultimate opportunity to start from scratch.
We decided to use our ignorance for all it's worth and to do some first principles thinking. We started to think, what kind of insurance company would we love? What could we bring from the experience that we had in the tech sector, in the sharing economy, in consumer-centric innovation? And how could we use all of those to build an insurance company if we had an entirely blank page? So we decided to take a run at reimagining it. Our strategy is really quite simple. It begins with being customer-centric, devoutly customer-centric. That may sound trite, but in insurance, it's a formidable task. The very business model of insurance is seen as pitting insurers against their customers. But if you do the hard work of modernizing the business model and actually get to delighting customers, that can fuel rapid growth, very rapid growth. Growth is valuable in and of itself, but for us it does double duty. It generates huge amounts of highly predictive proprietary data. At its core, insurance is about monetizing probability theory, and so a sustained data advantage means a sustained advantage at pricing and underwriting risk. That's the very heart of insurance. Finally, given how our business is built atop of a digital substrate, those data serve as training data sets for many aspects of our business, allowing us to refine our algorithms, increase our efficiency, and lower our costs to the delight of our customers. And so the loop closes, the flywheel turns, and the moat grows stronger with every rotation. That is our strategy. It starts with delighting the customer. Always put the customer at the center. Build a technology stack that is customer-centric, a business model that is customer-centric, a user experience that is all about the customer. Not the policy, not the broker, not the regulator, not the technology, the customer.
We wanted to build an insurance company that people actually love by removing friction from the process. The perception is that insurance companies make money by denying claims. So there's conflict of interest at the very core of the business model.
You claim $1,000 and I'm the insurance company. If I pay those $1,000, you're $1,000 richer and I'm $1,000 poorer. So when it comes to paying your claim, we're fighting over the same coin. It's difficult to build a lovable brand atop of a conflicted relationship. That's why we built our own insurance carriers in both America and in Europe. We own our licenses, we own the relationship with the regulators, and we own the relationship with the customer. Building our platform from scratch, every license, every line of code, enabled us to reimagine what the business model of a modern digital insurer can be. At Lemonade, when you pay us $1, you know in advance that we will keep a fixed fee, currently 25%. We use the remaining 75% to pay your claims and reinsurance, and if there's money left over at year's end, we give it back to nonprofits of your choosing. These two programs, our charitable giveback and our reinsurance, they act as ballasts, stabilizing our flat fee, and we believe that changes everything. Insurance is a high retention subscription business, which is why the top line of insurance companies are usually stable and predictable, but their bottom lines can literally fluctuate with the weather. Earthquakes, hailstorms, wildfires, hurricanes, all these can strike with little or no warning, and that volatility means that insurers often see wild swings in their results. And that is why they must keep such capital-intensive reserves for those rainy days. Lemonade works differently. The way we have structured our reinsurance means that we have dramatically curtailed any tail risks, letting us operate as a capital-light business with predictable results, even in years with bad surprises. What about the years with good surprises? Well, when the variance is favorable, we share that good fortune with nonprofits chosen by our customers. As a certified B Corp and a mission-driven company, this annual giveback is hugely meaningful to us all. But it goes much deeper than just feeling good. Taken together, our charitable giveback and our reinsurance, they mean that we are less incentivized to deny your claims, and you're less incentivized to embellish them. And so the insurance vicious cycle of spiraling distrust starts to look more and more like a virtuous cycle that we believe ultimately lowers friction, lowers fraud, lowers churn, lowers costs, all to the benefit of our shareholders, our customers, and their chosen charities. The upshot is a capital-light, contemporary, and predictable business model that, we think, turns a transactional and conflicted relationship into an aligned and meaningful one.
Everything about our product feels radically different than what you'd expect. You buy insurance from Lemonade by chatting with our bot, Maya.
I'm me, and there's Maya the bot, which is, I would say, an AI version of me.
I signed up like in 30 seconds. It was done, easy.
Chatting to Maya is playful. People enjoy the experience. They often post about how easy, unexpected, and refreshing it was.
She's much more efficient and very, very nice, I'm told.
To help people feel comfortable and understand what they're buying, we hardly use any insurance language in the process.
Using the Lemonade app was nice and easy, straight to the point. It was immediately done.
It's so much more pleasant when you can just like text your insurance company.
When you get coverage quickly and painlessly, it transforms the experience from a hassle to something joyful. Decreasing dependency on agents helps us lower costs and pass on savings to customers. This can be dramatic, with minimum premium costs often 50% less than our competitors for first-time buyers of our renter's insurance. In addition to the purchase experience, we've completely reimagined how claims work. Claims are the most important part of our business. When you buy insurance, the product you're actually buying is the ability to file a claim. So we designed a digital process that allows us to handle and pay claims much faster. Our AI bot, Jim, can often determine if a claim is valid, and if it is, pay it in seconds. In about 96% of the cases, Jim will take first notice of loss. In fact, Jim handles, settles, and pays about a third of our claims instantly. This is all done with absolutely no human intervention.
Our business model aligns interest, and our technology removes friction, hassle, costs, and delays. We believe this is the key to delighting our customers. Even in cases where Jim can't authorize the whole payment, AI Jim has done so much of the heavy lifting that by the time a human comes into the picture, everything is laid out neatly in front of them, allowing us to settle claims with a minimum of hassle, a minimum of delay, and a minimum of overhead.
The combination of our app and our meticulously trained customer experience team helped us achieve a Net Promoter Score of above 70. That's a score usually seen by the likes of Apple and Tesla, not insurance companies. Tens of thousands of customer reviews have awarded Lemonade a near-perfect rating on the Apple App Store.
We also benchmark ourselves against the rest of the insurance industry. In our short time in market, we've climbed the ranks to become the top-rated homeowners and renters insurance company in the US, according to a number of sources, among them ClearSurance, one of the most popular destinations where customers review their insurance company. Out of over 300 insurance companies ranked there by consumers, we currently sit at the very top. The consumer publication, US News and World Report, has similarly crowned Lemonade the best renters insurance company for 2020. We've worked hard at understanding what consumers want and built, pretty much from scratch, a new business model, infused with aligned values and packaged using a playful and incredibly sophisticated technology stack. We've been able to harness the delight that generates to feed rapid growth.
Also ich weiß, das war jetzt ein sehr, sehr langes Video, aber ich finde, Lemonade hat das wirklich sehr, sehr gut gemacht. Ich kann da nicht wirklich viel besser machen, als es logischerweise Lemonade gemacht hat. Mit den Zahlen, mit der tatsächlichen Bewertung von Lemonade befasse ich mich im nächsten Video. Ich musste aber sozusagen so ein Video hier machen für die Leute, die Lemonade noch nicht kennen, was die Mehrheit sein wird, damit ein Grundgedanke von Lemonade entsteht, dass ich dann halt auch wirklich auf die Zahlen eingehen kann und das besser verstanden werden kann und ich immer auf dieses Video hier zurückführen kann. Auch ich weiß, es war jetzt kein hochproduziertes Video, weil ich nicht viel selbst davon gemacht habe. Und ich kann schon mal so viel spoilern. Für mich ist die Wahrscheinlichkeit, dass Lemonade zu der aktuellen Bewertung ein 10-Bagger wird, also dass sie sich verzehnfachen über die nächsten Jahre, sehe ich als sehr, sehr große Wahrscheinlichkeit an. Und falls ich dich jetzt ein bisschen heiß gemacht habe auf die Lemonade-Aktie, weil es ja theoretisch vielleicht ein 10-Bagger sein könnte, dann abonniere den Kanal, damit du das nächste Video nicht verpasst, wo wir ganz spezifisch auf die Zahlen und auf die Bewertung von Lemonade eingehen werden. Ich bedanke mich für deine Aufmerksamkeit und bis zum nächsten Lemonade-Video. Ciao, ciao, bis dann.